Hello guys, and welcome back to another video. So this is just going to be a quick video. Adobe stock is down -5%, and I just want to say that nothing has changed. The fundamentals has not changed, nothing about the stock has changed, and really even when you look, there is actually no news of why it dropped. So there isn't any new competitor that's in, or there isn't any fears of AI. It just dropped because it dropped. Nothing more to that. So what I'm trying to say is it is important that you remember what you're holding. See, everything's up to the right. We can even see this in the quarterly revenue growth. You can see that even when AI is being accelerated, the quarterly revenues are still increasing as well. And same thing with their margins as well. So in times like these, when a stock falls, the price falls, but the fundamentals stay the same and everything stays the same, this is where there's a disconnection from the value of the price. And the price dropping does not change any of the thesis that we have talked about in the previous Adobe videos. In fact, it presents us with a better buying opportunity. I mean, it's near its 52-week close, sitting at 311, and now it's 232. If you look at the insights, it's have 4.5 rating, 4.45, but that's pretty good. Like, even if you look at Microsoft, it's like around 4.1, and that's because their profitability looks good, their management looks good, their growth looks good, their financial health looks good. Analysts are giving it a good rating, their valuation looks decent. Everything looks the exact same. Their forward PE is 13, their PE is 19. So you're buying a stock that's even cheaper than the S&P 500. So if you think that the S&P 500 is expensive right now, well, Adobe is even cheaper than that. Now let's see what Warren Buffett says when a stock price goes down.
How do you tell the difference between reasonable and unreasonable fear? So in other words, a stock's down, maybe it should be down, or a stock's down, maybe it shouldn't be down.
Well, you just keep looking at the facts. I mean, you're looking at a business. That's the important thing. You don't look at a stock chart. I looked at stock charts for years. I used to have a lot of fun doing that. I was kind of groping around for a philosophy. You look at the business. I mean, how do you decide if you own a half interest with some buddy of yours in a McDonald's store? How do you decide, whether it's a successful investment? Well, if the stone's 2 feet out and there's no business today, do you say, well, I made a terrible deal? No, you look at how it's performing as a business over time, how it's doing versus the competition,
And like I said, we can see this here. We can see how the business is performing and that is not losing market share from other competitors, and that Adobe is operating in a totally different field than its competitors. Their competitors like Canva, Figma, they're more on different type of products. Or if you look at Canva, they're more targeted for the normal retail users, while Adobe is targeted for enterprise customers. And if you're planning to sell Adobe, then you should also listen to this.
Some people should not own stocks at all because they just get too upset with price fluctuations. If you're going to do dumb things because a stock goes down, you shouldn't own a stock at all. No,
what are dumb things? Selling a stock?
Yeah, selling a stock because it goes down. I mean, if you buy your house at $20,000 and somebody comes along next day and says, I'll pay you 15, you don't sell it because the quote's 15. You look at the house or whatever it may be. But some people are not actually emotionally or psychologically fit to own stocks. But I think more of them would be if you get educated on what you're really buying, which is part of a business. And the longer you hold stocks, the less risky they become. Whereas the longer the maturity of a bond, the more risky it becomes. Some people.
So like he said here, you should really know what you own, and you should really study the business that you own. And if you really had looked at Adobe, you can tell how deeply embedded into it. You can tell how deeply it is embedded into other companies and enterprise companies, and how their users that use them are only enterprise. And even though when there's price hikes, their customers do not leave. This tells you how good is Adobe and how there's no other competitor to supplement the products that Adobe has. So this is it for this video. I just wanted to make a quick video talking about Adobe stock and why it's down. There's no news. Everything has stayed the same. The business is the same. The remote is the same. Everything's intact. So if you like this video, don't forget to subscribe and leave a like, because 92% of people that watch my videos are not subscribed. So please leave a like and subscribe. Thank you.